Having FUBO in your account is an absolute privilege. It's a blessing. Ask anybody who's held the stock. It is a monster, and it's going to put monster gains into your portfolio. But when the time comes to act, you're going to have to act fast. The window of opportunity will be closing very quickly. So in this video, I'm going to be telling you exactly when that window of opportunity will come, and it'll be up to you to act fast when that happens. I'm also going to be talking about the good news and some more bad news for the stock, but I don't think it's terribly bad, and I'm about to tell you why. So stick around because we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. What is going on, ladies and gentlemen? Welcome back to the channel. Welcome back to another video. Today, we're going to be talking about FUBO because this is the official FUBO channel where you're going to learn everything that you need to know about FUBO and received. Now, I want to get right into it, ladies and gentlemen, but before I do, I would like to ask you to please consider giving this video an early thumbs up, as it greatly, and I can't stress that enough, helps to support this channel. I put a lot of time and effort into each video so that we could all make money from the market together. And if you're not part of the family yet, I want you to join my family. We're growing fast, both as a community and financially by the day. All you have to do is hit that subscribe button, and don't forget to tap that bell so you have access to videos as soon as they come out. All right, so now going back to FUBO. So a couple of videos ago, maybe it was just one video ago, I'm not sure, but I told you guys about an analyst upgrade. The analyst that I'm specifically referring to is Laura Martin of Needham, and she raised her price target on FUBO a couple of days ago, like literally. And she didn't just raise it, she doubled it. So it went from $30 to $60. And needless to say, she's extremely bullish on the stock, and I'm going to start this video off by telling you why. Now, before I get you too excited, there is some bad news that could potentially cause FUBO's share price to drop a little bit, and I'm going to be telling you all of the details surrounding that in just a second. But I thought it would be more fun to talk about why Laura Martin decided to double her price target on FUBO first. So first, she mentions the streaming growth, which also benefits from strong advertising revenue demand if we do come out of the pandemic in 2021. And if we don't, it has a subscription revenue stream model. So at least we'll have that. Now, sports is expected to go back to normal next year. And with FUBO being a sports-first platform or streaming service, which provides ESPN and around 50 other sports channels, we're definitely going to have an edge on other competition. Now, the demographic that this brings in by having these channels is an audience of young men that advertisers need to reach, and they're paying thousands of dollars per year for sports content. So this is considered to be a great demo. Another thing that I want to point out is that we know that the market responded favorably to the news that FUBO is eyeing exclusive sports content. Now, they're already doing direct deals for the NFC channel, NBA channel, and several other direct channels with different leagues. They also have more regional sports networks than any other skinny bundle. These are skinny bundles, and they cost around $60 per month for 12-month plans. The analyst also mentioned that the upside is probably coming from the sports betting because, as we already know, they acquired a company that does wagering and are expected to have a sports betting product in the market within 12 months. So she was really excited about that and brought up the fact that DraftKings trades at 25 times revenue. And then what I want to point out is that this is the same analyst that pretty much called out Roku and Trade Desk before they started popping off. So basically, she's got a track record, a successful track record of calling out stocks that pretty much go parabolic. Another relevant point that I need to make here is that we've seen a really strategic shift in the consumer towards streaming, which is driving TV connected ad revenue, and those are benefiting even during the pandemic, but as we come out of the pandemic, the momentum around connected TV, viewing, and ad revenue is going to be really powerful because $60 billion of linear TV advertising has to reach these consumers that are now only on streaming platforms and places like Netflix and Disney Plus that don't have any ads. So those advertisers really have to pay a lot of money to reach consumers that are young and on streaming platforms, so that really does help the platforms like Roku, Trade Desk, and of course FUBO. Well, I guess now that we're done with all the pleasantries, we can talk about the risk that I brought up earlier in this video, because there is a catalyst around the corner that may bring or introduce some type of risk to the stock in the short term. So I'm basically expecting a negative impact on the share price. So this catalyst will take place on January 1st. And of course, it's the shareholder lockup expiration period. What exactly does this mean for the stock? Well, the bear case is that the float can nearly double by January 1st because half of the shares outstanding have become unlocked or will become unlocked. So right now, these shares are not allowed to be sold because of a deal with the underwriters, but essentially all of these shares will now become sellable in the open market on January 1st. So in theory, if all of these were to become available for sale on the first day, that could really hurt the share price. Now, I certainly don't expect all of these to be sold on the first day, but I imagine that, there will be some selling on the first day because this thing has run up a lot, and you got to, think about how cheap these shareholders or these institutional shareholders got these shares for. So they're going to want to take profits, and they're going to want to, get back in at a lower price. But there are two things mentioned which may soften the blow, and these are coming from this analyst. And she says that the current volume is 6 million per day, which could absorb a lot of the impact much faster than what they originally expected would happen when the stock first went public. Number two, a lot of the shares that will be unlocked are owned by big companies like Comcast, Viacom, AMC, A&E, and Discovery. She basically compares FUBO to Roku and says that based on what happened with Roku, these companies left about a year after Roku went public. So she's claiming that basically we're not going to see a big sell-off because these companies are so big and have so much money that they're not in need of money, and they would rather, hold these shares for exposure to the industry, and that will probably see these shares sold over time to where the impact is not as great. But that's just her best guess, is what she said. So with all this being said, it's pretty much inevitable that we are going to see some type of drop in share price. Now, whether that happens, beforehand, which I think we are seeing a little bit of a drop right now, and that's probably from people that are getting scared because they found out about this. So they're kind of, taking profits and everything, but also because people were naturally going to take profits anyways because of this huge run up. So this kind of just probably sped it up. Now, the risk that we're facing when this shareholder lockup period expires is that these big institutional holders will start selling off. Now, I don't know how many of them will start, will want to keep their shares and how many will actually sell. But I just am not buying the fact that some big institutional holder won't sell when these types of profits are involved. This stock has had too much, too big of a move for them not to sell. And so we probably will see a lot of volatility coming into January. But in my personal opinion, I think that the dip will be bought up rather quickly, and people are going to want to get, right back in. So expect this stock, as soon as it drops, I would start buying in, or at least that's what I plan on doing, and just adding to my position. The lower it goes, the more we buy, and then we just wait for it to recover, which should be relatively quickly. But if not, then you should definitely consider that an extra opportunity to keep accumulating shares at a lower cost. So you're basically going to be getting extra time to come up with extra money to keep adding to your position, because if you really believe in this company, then you're going to want to take advantage of every opportunity that you possibly get to capitalize on accumulating as many shares as you possibly can while you still can at this cost. So that was one set of bad news that actually isn't bad news if you think about it, because it's giving you an extra opportunity or a second chance to get in. And it's especially really good news for those of you that haven't gotten in previously, because now you'll be able to get in at a lower cost. So I'm going to say that that's going to be the biggest catalyst that could potentially have a negative impact on share price for the short term. Other than that, unless there's a black swan event or something that I'm not aware of, which I am not aware of anything that I'm not aware of. I know that sounds stupid, but I had to say it. I just feel like I had to lighten the mood a little bit, you know? Other than that, I don't see anything else affecting share price. Now, we did have a downgrade from an analyst at BMO Capital Markets, which was yesterday, and we're going to talk about that very quickly. But I pretty much, consider that to be insignificant, because you'll see those type of things happening all the time. You'll see one analyst come out and say that they're bullish on a stock and upgrade it, and then you'll see some contradiction with another analyst that comes out and downgrades it. It's back and forth. You'll see that all the time. I mean, it's typical. You'll see that pretty much with every stock where, it's upgraded, downgraded, back and forth. That's just how this game works, so just be prepared for that. And a lot of times, especially in this market, downgrades from the analysts have been pretty much ignored by a lot of the stocks that I've been trading, and they continue to move upwards. Now, you may see a pullback initially on the downgrade, maybe like the first day, and then you'll see the stock recover relatively quickly. But it just depends on, what the analyst actually says, because some analysts don't give you a reason for the downgrade. Other analysts do. Now, these analysts are wrong all the time, and that's also probably a reason why they get ignored. So you can't really put too much weight on what they actually say. But let's go ahead and talk about this analyst from BMO Capital Markets. So his name is Daniel Salmon, and I do want to point out that that sounds like a fishy name. But he downgraded FUBO from outperform to market perform, with a price target lifted from $33 to $50. And this is where that 15% drop came from yesterday, like I said earlier. So if you were wondering what happened, that was it. But anyways, guys, listen, have a Merry Christmas. I'm glad that you took the time out of your day to come and listen to me talk. But I do want you guys to enjoy this time with your family. That's very important, so go ahead and do that. And in the meanwhile, I'll be working on videos as I can, and I'll get them uploaded for you guys. And as always, I will see you guys in the next video. Have a very Merry Christmas, and I've got the end screen coming right up. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe, because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.